Good day, everyone. Our next set of work will be on payment certificates, the issue of monthly valuation payment certificates. But before we do and go directly into the calculations, let's just spend some time on the JBCC principal billing agreement, and I'm going to go through the relevant clause specifically relating to payment certificates, and you'll find that on page 20 of the JBCC Principal Billing Agreement, clause 25. It is important that as a quantity surveyor that we should know the JBCC document, because that is our guideline how to act, and we need to follow the rules and regulations as stipulated by the principal agreement. Now, obviously, in any form of the agreement, specifically in the construction, you'll have an agreement between two parties, which is now referred to as the employer and the contractor. Sometimes we refer to the client, but you'll note that the JBCC, nowhere in the document it is referred to as the client, it refers to as the employer. And also what is important to note that in the JBCC, there's no reference to a quantity surveyor or an architect. It is referred to as the principal agent, and the principal agent could be an architect or a quantity surveyor. And the quantity surveyor or any other consultant, such as your electrical engineer, is referred to as agents. So if we look at the clause 25 of JBCC Principal Agreement, referring to payment, clause 25.1 states that the contractor shall cooperate with the principal agent in preparing of cash flow statements and payment valuations. Now you'll note that the JBCC referred to the principal agent is responsible to prepare and issue a payment certificate. We all know that is not the case, because if you are a quantity surveyor on the project, the quantity surveyor will then be responsible in preparing the payment certificate and then issue that to the principal agent, who will then forward and issue the final payment certificate to the employer for payment. So although the JBCC Principal Agreement talks about the principal agent shall prepare, you as quantity surveyor are actually responsible and you're getting paid for that service. So the contractor must liaise with you as quantity surveyor in order to prepare a payment certificate. And also it states, clause 25.1, where the contractor has not provided such information, the principal agent shall make a fair and reasonable estimate. So there is going to be some form of liaison and communication between the contractor and the quantity surveyor when we are actually at that stage preparing a payment certificate. Obviously, in the contract data, prior to the signing of the contract, the dates is actually stipulated by when should the quantity surveyor prepare and issue a payment certificate. So if it's on the 25th, the contractor knows, the employer knows, the quantity surveyor knows that on the 25th of the month, we should be handling and issuing a payment certificate. So that is stipulated. Clause 25.1 stipulates that the contractor should work together, providing information in order to set up a payment certificate. Clause 25.2, the principal agent shall regularly, by due date, and that is almost monthly, every month, the principal agent should issue a payment certificate to the contractor until the issue of the final payment certificate. Now, the final payment certificate is at the end of the project when the contractor and the employer sign off on the final account. We will discuss the final account as a separate section at a later stage. So the principal agent on a regular basis, monthly, shall issue a payment certificate up to the final payment certificate. Payment certificates may be a null or a negative. If it's null, in other words, there is a zero amount to be certified, as a quantity surveyor, you still have to issue a payment certificate, let's say payment certificate 10 to the value of a 0. It is not the case where you don't have money to certify that for that month, you're not going to issue a certificate. It must be issued even if it's a null or a 0 amount. Or negative. Now, let's hope that will never happen in your career. If it's a negative figure, it means that the contractor must refund the employer. In other words, you as a quantity surveyor has over-certified previously. So let's hope that will never happen. 25.3, each payment certificate will include the following. Value of work executed. In other words, you have to go on site and value the work that was executed. In other words, you and the contractor will walk on site and, let's say, for instance, value the masonry, all the work that's been done. There is methods how you can do it. You can either use a percentage method. In other words, we can look at the construction up till that point and decide amongst ourselves that masonry is 55% complete. You go back to the office, calculate the value of masonry, times it by 50%, 55%. That will give you the value of the work done. It is very risky. It's okay in the initial beginning of the project, but when you get to the latter part of the project, it's a very risky method to use. Alternatively, you can go and then apply quantities to the actual specific item. So it's the value of work executed, value of work done. Remember when we did escalation, it was value of work done, and then obviously we include the materials on site as well. That is now clause 25.3.2, materials and goods. Now you'll see in the JBCC certificate itself, there is provision made for materials and goods on site as well as off site, and we'll talk about that in a moment. 25.3.3 talks about security adjustment, and now that is not security in the form of people that is going to look after the project. Security adjustment is a construction guarantee that needs to be in place. The contractor needs to provide a construction guarantee, which we will also discuss. That's a separate clause in the JBCC. The contractor should provide a construction guarantee, while the employer should provide a payment guarantee. We'll come back to the security adjustment. Also included in the payment certificate is referring to clause 25.3.4, refers to cost fluctuations, and that is basically escalation. So if the contract is a fixed contract, there's no escalation. If it's subject to escalation, obviously you're going to include escalation. Remember what we've discussed previously. I've mentioned that a payment certificate includes the calculation of escalation. So at a later stage, we will compile escalation and we'll include it in our payment certificate. There's going to be clause 25.3.5, a gross amount certified. You just look up in the, that is straightforward from the JBCC payment certificate. Also 25.3.6 talks about the amount previously certified. Now, our approach will always be to value the work up till to date. In other words, what is the value of work done from handover up till to date? And then we'll deduct what we've previously certified. It's always the cumulative total up till to date, less what we've certified previously, as clause 25.3.6 states. Then there's also the amount due to either party in the recovery statement. Obviously, the amounts due could be in the form of default interest. We'll also talk about that later. Or penalties, default interest, someone is in default. In other words, let's say the employer paid the previous certificate late, there is interest, default interest to be added onto the actual payment certificate. So we have to look at that as well and also include that figures in the payment certificate. Then obviously we have to include the tax or the VAT as we all know it by now. The interest amount also, I've mentioned that 2539, the interest amount also in the recovery statement. We'll talk about the recovery statement. It is part of the payment certificate. You'll see when we're going to do the actual payment certificate itself, there is various certificates that we need to complete, and a recovery statement is one of them. A recovery statement in a nutshell is almost a summary of the figures related to penalties, default interest, compensatory interest that is already included in your payment certificate, the main certificate itself. And then closing up on 25.311, the net amount certified due to the employer or the contractor. Let's always, it will be a good quantity surveyor if you always end up with an amount certified to the contractor, and let's hope it will never be a certificate due to the employer, meaning what I've said previously, that the contractor must refund. You've over-certified, so the contractor must refund the employer. So be very careful when you do your payment certificates. Clause 25.4, the value of materials and goods, excluding materials off-site. Remember, there's two blocks on the JBCC certificate. You're going to insert the amount for material on-site as well as off-site. In other words, it's somewhere in a store. The materials and goods shall be included. Good, we have to pay the contractor for the materials on site, and remember, you've also added escalation onto that materials on site. But be careful. Clause 25.4.1 states not prematurely delivered or offered for delivery in terms of the program. 25.4, in other words, it must be ordered already. And it's not almost a statement that I'm going to deliver it on site. I'm in the process. We're not going to accept that. 25.4.2, stored and suitably protected against loss and damage. It is there on site. And also it is covered by insurance. So that is typical questions that you're going to ask the contractor. Is this material? We've got 10,000 bricks on site, and there's in the store pockets of cement. I'm going to include that in the certificate. Is it insured? Clause 25.5, that relates to materials off-site. And again, the same applies there, that you should have some form of security before we actually certified for materials off-site. You're also going to ask the contractor, because you can imagine if you pay the contractor, let's say 100,000 Rand for materials, which is not on site, it is on an extended site, as we all also refer to. Let's say it is carpets, for instance, it's in the store and not on site, and all of us, the next morning you read in the newspaper that the carpet factory has burned down, and you've paid the contract already for the carpets, but there's no carpets to be shown. So you need to ensure that carpets that you've certified on an extended site or off-site, that it is insured. And obviously the contractor must provide you with evidence. 25.6, when we pay for materials on site, or for materials off-site, it becomes the property of the employer and shall not be removed. The principal agent, clause 25.7, shall with each payment include, in other words, again, as quantity surveyor, you should include the following. To the employer and contractor, a recovery statement. We all know by now that's part and parcel of the whole package, showing the amounts due to each party in the current payment certificates. And as I said, that's just basically a summary of certain amounts which we've already included and shown in the main JBCC payment certificate. Clause 25.7.2, the contractor, part of the payment certificate, we should actually indicate to the contractor a statement showing the amount certified for each subcontractor. And on this specific subcontractor, we refer to as the nominated subcontractors. So the contractor, the main contractor, can't now at this point in time say, well, I didn't receive any money for the electrical. It is already been certified because it's issued and certified by means of a certificate. So the contractor will receive a statement with the values of all the amounts that's been certified for the relevant subcontractors' work, nominated subcontractors' work. Each subcontractor, the nominated specifically, will receive a certificate which we refer to as a payment notification, stipulating the amount that's been certified. So the contractor will receive a notification that we've paid the electrical contractor 100,000 Rand for this month, and the electrical contractor will receive a notification statement that 100,000 Rand was certified, so the electrical contractor will wait for the 100,000 Rand. So the contractor has to pay that. There's no way that the contractor can argue and say we haven't, or he hasn't received the 100,000 Rand in the payment certificate. 25.7, the default interest. Now, that is a calculation on its own. Default means someone is in default. And in this case, just a typical example which I've used is where the employer was late in payment. The previous certificate was paid late. So therefore, in my current certificate, I will then add on interest. Now, there is a definition. If you go to the JBCC, the first few pages, you'll see under definitions, clause 1, you'll read up the definition for default interest. However, when we're going to do the actual calculations for payment certificates, we will come back to a more in detail discussion of default interest. Now, just for noting, default interest is applicable up till practical completion. It is the late payments specifically. Then there's also compensatory interest, and that is mainly for our purposes at the issuing of a final payment certificate. Because if the contractor reaches the end of the project, in other words, we've reached practical completion, he moves off site, the employer takes over the building, there will always be an amount outstanding to the contractor. So that amount that is still due to the contractor will be then subject to interest, and we refer to that as compensatory interest. Clause 25.8, interim payment certificate, not evidence that work and material and goods are in terms of contract documents. So if I issue a payment certificate, it is not to say that the quantity surveyor is happy with the standard of work. I'm not in a position as a quantity surveyor to say to the contractor, I'm not going to pay you for that substandard plaster on the 10th floor. However, I will value that plaster and I will include it in my certificate. But I will, as a quantity surveyor, I will just ring up the architect or whoever the principal agent and just inform him, Mr. Architect, I've certified 20,000 Rand of plaster on the 10th floor. Could you just go and have a look at the quality of the work and the standard of workmanship, and should we include it in the certificate or not? So as a quantity surveyor, I'm not in a position to deduct it from the certificate. 25.9, the principal agent to certify 100% of the amount of the final account, including adjustments, and that adjustments we will talk about when we do the final account. So only in the final account, I will include everything, contract instructions, all the necessary adjustments, final escalation, And then based on that final figure, I will then issue a final payment certificate. What is important, clause 25.10, the employer shall pay the contractor the amount certified within 14 calendar days. So if the client or the employer pays on day 1, he's in time. If he pays on day 14, he's still on time. If he pays on day 15, 16 onwards, he's late. So therefore, in my next certificate, I'm going to almost penalize the employer by adding a default interest. The contractor to pay the employer within 21 calendar days. In other words, should there be a negative figure on the certificate, in other words, there's a refund from the contractor to the employer, the contractor must pay the employer within 21 calendar days. And obviously, if he doesn't pay within 21 days, there is then default interest also applicable on that amount due to the employer. 25.12 talks about the construction guarantee, the fixed guarantee. These are alternatives as well. I'm not going to go into detail with this. Construction guarantee 25.12, the contractor shall provide a construction guarantee, as we've said right from the beginning, prior to the signing of the contract. As I said, there is basically 3 various types. It's up to the contractor to decide which one he's going to select, and that must be inserted in the principal agreement prior to the signing, and then we'll work from there. This specific one that is illustrated on in the JBCC, clause 25.12.1, 12.2, and 12.3 is the fixed guarantee with a payment reduction. If you look at 25.12, that is a specific payment reduction. And also note that we don't use the term retention within the JBCC. This specific one, we can refer to this as a bit of a retention. In other words, I'm not going to pay the contractor 100% of the value of work certified. I'm going to hold back 5%. That is the payment reduction. It's 5%. There you can see 25.12.1 talks about we're only going to pay the contractor 95% up till practical completion. We'll talk about the construction guarantees when we actually deal with the payment certificate calculations. 25.13, the contractor shall pay all subcontractors within 7 calendar days. And also the employer can request the proof thereof within 7 days thereof. So the employer must pay the contractor within 14 days. And once the contractor received the payment, the contractor must pay the subcontractors within 7 days. (25.14) where the employer has made a partial no payment by due date, or where the principal agent fails to issue a certificate, the contractor may give 5 working days notice to comply, failing which the contractor may. In other words, the contractor doesn't have to continue work if he doesn't get paid. So in this case, the contractor can do the following. He can suspend the work, exercise his lien. In other words, we're all familiar with the contractor's lien. Where this has not been waived, it is still in order, or call up the guarantee for payment. In other words, the contractor has to provide, as I've mentioned, a construction guarantee. The employer will have to provide a payment guarantee. So if the employer is not paying, the contractor can stop the work. He can call up his construction lien, or he can call up the payment guarantee. What is important, 25.11.15, is that the principal agent is to issue a final payment certificate to the employer and contractor within 7 calendar days of the acceptance of final account. So that final account, we've got 90 days to complete the final account. But it's important that the final payment certificate should not be issued before the issuing of the final completion certificate. That is important. So the architect will issue, or the principal agent will issue, a final completion certificate. And only then we will issue a final payment certificate. We will come back to this specific clause also when we're dealing with the final account. And once we've compiled the final account, we will then issue a final payment certificate, and then we'll touch on this as well. It is important. And the reason for this is that once the contractor has received final payment and there's still work to be carried out, there is still work to be rectified, the contractor can walk off site, and then it's the problem, it becomes the problem of the employer. So that's why it's important that to make sure that the contractor has fulfilled his duties and then only issue a final payment certificate. Clause 25.16, where the contractor disputes the correctness of the final account, the principal agent shall issue an interim payment certificate. In other words, the JBCC is very strict on time. We're not going to wait for the contractor to come up and for the signing of the final account. If there's an amount due to the contractor, we will issue an interim payment certificate. The contractor might not be happy with that, but we can't wait for him. We have to conclude the project, so the principal agent will issue an interim payment certificate. And then obviously clause 25.17 talks about if there's any disputes, and let's hope there will not be, we will then follow the normal route of going to jurisdiction, following a arbitration, or even go to court if the contractor is not happy with the final account. We will talk about the final account. That is a section on its own, and based on the final account, we will also then issue a payment certificate. Good. Our next section of work will then be to actually look at the calculation and to determine the value of a amount due to the contractor preparing a payment certificate. Until then, keep well and stay safe.